that right there. Now the professional definition is it's a whole life insurance policy.
Yeah.
Whole life insurance has cash value built in, no matter where you get the whole life insurance. But infinite banking is a whole life insurance policy, whole life cash value insurance policy on steroids. Okay. Typically given by a mutual company. What is that? So I'll give you an example. The company that I work under is Penn Mutual. There's only four living mutual companies right now. The two major ones is Penn Mutual, the company that I use a lot, and Mass Mutual. Okay. Mutual companies typically pay dividends. We're going to go there a little bit later. Life insurance companies like a Nationwide, a Lincoln, who I also work with. See, when you're building your own independent practice, I am licensed under all top-rated insurance investments and finance organizations. So I can use any one of these organizations. So I know all of their products and solutions well. Good. I'm not using just one product here. Okay. But when you talk about the definition of infinite banking, typically it is a life insurance policy from a mutual company because they're able to not just give you a guaranteed interest rate, but they're able to compound that guaranteed interest rate with dividends.
Yeah.
Mutual companies are able to do that inside of a life insurance policy.
Yeah.
Okay. So it's guaranteed growth inside of a life insurance policy where the majority of your premium go towards a cash bucket connected to the growth and dividends versus you paying the majority of your premium towards the death benefit. So it's a cash heavy whole life insurance policy. That is the official definition of infinite banking.
I love it. So can you give us, listen, I was like, what is that? Give it to me. How much I got to pay? So can you give us, like, and I'm going to go into more like the benefits and how it helps you and the pros and cons. Give us, like, if you can think of, look, don't throw out my numbers. Give them an example, like somebody is paying, $500 a month for X amount policy. And like, do you have like a number example you can kind of give them to kind of visualize this?
Yeah, preparing for this, I actually, first of all, I pulled my policy because the first thing I learned when I got in this business 12 years ago, my mentor sat me down and said, you have to believe in what you're offering to your clients first. And you have to have an understanding of it before you're able to offer it to your clients. Because if you don't have it for yourself, how are you suggesting to somebody else? Okay.
I like that.
So I pulled my policy, but I also pulled a policy that I felt would be the medium of what our crowd would be today. So this is, one of my 45-year-old clients who you've been with me since she was 40, got the policy in 2017. She spent $800 a month. And the reason why I used her is because just 7 months ago, she pulled $32,000 out of that policy to purchase her first home.
Well, say that part again a little slower.
Just a few months ago, she purchased $32,000 out of that policy to purchase her first home. Down payment. She wanted to put a larger down payment on, but a down payment on to purchase her first home.
Nice.
And she's only had the policy since 2017. She's paying $800 a month. Okay. Here's the other caveat. I like to create these policies because we can build them and customize them for you. That's why, like Terry said, your action item is to set an appointment with me because everybody's situation is different. Okay. And everybody's plan is different. What I love about whole life insurance is there's so many features and benefits to it that as the advisor, we can customize it based off of your needs. Right. And so this particular client is a business owner. She owns a daycare. Okay. So she was behind in retirement plan. And so we created a separate IRA, but we also created a supplemental retirement plan inside of this infinite banking strategy. Nice. Okay. And so what we were able to do was say, okay, you're going to need about, X amount of dollars, and this is going to get you where you need to be. But what we were able to do is set it up. She will never pay another dime into this policy after the age of 60. After the age of 60, she will never pay another dime into this policy. And she will have a minimum of $285,000 available to her to take directly out, while still having while still having $500,000 of life insurance coverage. God forbid something happens to her.
That's it. Good night, folks. We're done. Nothing else to say. Like, y'all don't understand. And I knew that's why I'm doing this workshop, y'all. So real quick, like, I'll bring the people to you because I didn't know. Look, information changes situations. You don't know what you don't know. Come on, somebody. And they still got a death benefit. Like, seriously. And so, all right, so let me ask you this. What are some of the benefits of infinite banking over like some other investment strategies? Like what makes it like a good investing strategy, a good financial plan even?
One, I always talk about, especially for my business owners, it's a nest egg, right? For my people who are investing in real estate, and I know a lot of people on here are, right? For my people who love the crypto world, with the crypto is absolutely amazing. For my people who are in the stock market, you are going to flourish and they are going to give you ascending wealth. But where's your nest egg? Where's your guaranteed portion, right? Because there are going to be down gears in those industries where you may need cash. And you don't want to pull the cash from an investment that is negative on that year. So the benefit of having infinite banking and your own bank is that on that year when the stock market is down, or in that month when crypto is down, but there's a house that you want to invest in for $20,000, and all your money is invested in crypto or stock, and those are going this way, or now you got to leverage your credit and go get a line of credit on your other investment to get this investment, when all you got to do is pick up the phone and call Rashawn and say, Rashawn, take 20 grand out of my life insurance policy and deposit it into my account. Tax free, by the way. Tax free, by the way.
Tax free. Tax free.
Tax free, by the way.
What happens when you take money out your 401k? Yeah.
So that's the benefit of the hedge. It's a nest egg. It's guaranteed growth. Let me tell you something. If you're looking for something that's going to give you 10, 12% interest, it's going to double what you put in there in 2-3 years, and you know it's going to give you that exponential excitement that crypto gives you. That's not for you.
Right.
And you can't wrap your head around, right, that this is a protection of asset item, that this is a nest egg item, then this is not for you. And that's perfectly fine. I'm cool with that, right? Understand it. I want you to have your crypto. Understand, infinite banking ain't going to make you rich tomorrow.
It's a long-term investing, right? Yes. And guys,
it's a tough tool for long-term investing. Okay.
Yes. And but
the bit of it is that different from a regular whole life policy, where in the first 3 years you don't typically see any cash growth in it, you would typically be able to take up to half the amount you put in the first year, and up to 90% of the amount you put in any years after that. So you have cash available almost immediately in a whole life cash value policy that's set up as an infinite banking strategy, versus a regular whole life cash value policy where no cash starts to build to the 3rd or 4th or 5th or 6th year, and it's only a couple $1,000, and you already put 20 grand in there, and you're like, what am I doing?
Yes.
And I'm not saying get rid of that. Keep that, because you're going to use that policy to protect yourself and your family. God forbid something happened to you. Right? God forbid something happened to you. That's the policy that they want to use first.
Yes.
Right? And so that's the benefit of it, not versus other investments, because you should have other investments. This is not a substitute of, this is not in lieu of, this is with. With other investments. Not I'm going to in this only, no, with my stock portfolio, with my crypto portfolio, with my real estate portfolio, with my exchange traded funds and my mutual funds. I'm going to also put a portion of my savings away into an infinite banking strategy. Hey,
so guys, and that's important. Let me just say that when we talk about diversifying, right? You talk about diversifying your investments and all those things. That's why we diversify, because some grow fast, some are small, some are big. That's why I said I have 20 streams of income. Well, I list my pension as one. Am I getting paid for my pension right now? No, I live infinite banking as one. You know what I mean? Is that one that I'm like actually using right now, but it's building for me. And I'm just going to say this for all my real estate people on here. We already know, and I teach this because everybody misses it. For that first-time home buyer, primary residence is 3.5% down. But when you get to hard money, 20 to 40%. When you get to, you're using conventional and commercial, 15 to 25%. So guys, if you start now with a policy like that and you're building, investing, building, investing, then you get to these apartment buildings, commercials, all these other properties you want where you cannot get that 3.5% down. Say, no, it's not a primary residence. Guys, even if you buy a $400,000 quad, right? 20% down of that is